Hello traders, Day Trader Matt here with businesswithtrading.com doing an E-mini trading room recap for Thursday the 20th of November. And today was another interesting day. We only made 2 trades today, missed a few trades, ended up pulling 3 points out of the market. We did have a nice gap down this morning, and then the market just started moving higher. Very, very interesting on the day. Our first trades were very quick. First trade was a short down here, and we were able to ride that down a little bit. And then we took a short up here, which we were able to take some profit on as well. And then the market started moving up, started moving higher, moving higher. We missed a long down here, and that was pretty much the big trade. We missed this one. We were thinking about a long over here, didn't really pull the trigger, but we did miss this one. We were looking for a nice move, and it happened without us. And that's definitely something important to talk about. We've missed a few trades lately, a few more than we usually do. And it is what it is. You could look at it as, look at all the money that I missed, or you can look at it like, it is what it is. We made 3 points. Looking at it like how a lot of new traders look at, they're like, they take it from 375, which is the low, which would be pretty difficult to actually pick up at that price, to the high, which is 51.75, and that's how a lot of new traders will look at it. Look at all of that I left on the table there. Rather than looking at it a different way, which in real time, which is what really matters. Did it look like a good entry? Did it look like a continuation? What did it look like? And that's really what you have to look at it as. I wanted to take the least risk, the less risk trade possible, which was right here. I didn't really look at it up here, and I didn't look at it here either. I looked at it a little bit, but not enough for a trade. You can see it was the last move up, and then it started chopping sideways. And that's the way that I was looking at it. It's important to talk about the trades that made money, the trades that didn't make money, and the trades that you tried to get into and you actually were not able to get into. I think it's important to talk about all of that. You have, I hear other people talking about their trades, and they don't talk about the ones they missed. They, some of them enter market orders, so they never miss a trade. I think that's a stupid idea, but, to each their own. I trade my style. That's the only style that I trade. That's the only style that I care about. I get a lot of emails talking about, have you used this indicator because it's really good. Maybe you should try out this system, Matt, because it's pretty good. And my reply is always the same. I have my trading style. I trade how I trade. And then usually I'll ask a follow-up question: are you making money with it? Oh, you're not. Well, why would you want me to try it if you're not making money at it? And that's usually like if I'm working with somebody and they bring something up. If someone just asks me a question out of the blue, I'm not gonna ask them that. I think you have to have a little bit of a relationship with someone before you ask them questions like that. Because I guess it's like meeting someone at a movie place, and what do you do? Do you ask them really, really intimate questions, or are you just talking about the weather or something like that? Trading's the exact same way. Are you going to be very aggressive, or are you not going to be very aggressive? And I do talk about there's a good time to be very aggressive and a good time not to be very aggressive. The market's always changing, and sometimes it's difficult to really tell how you should be. Should you be aggressive? Should you not be aggressive? There are times when you can tell specifically. It's very obvious. I teach that in my trading course. I teach that with coaching clients. And I hammer that home. Because it's a very important topic. And with trading, a lot of the topics that I do teach, the style that I trade, is a little bit foreign to others. I incorporate a couple things that some people are probably familiar with, and some people are probably familiar with in a different way, and some people probably use them different than the way I use them. Like candles, for example. People probably use them a little bit differently. Like the way that Steve Nissan, however you pronounce his last name, the way that guy teaches them. A lot of people like that way. That's not the way that I use candles. I think that way that he teaches, I don't like it. Maybe it worked 400 years ago for rice traders. Great. But our market is dynamic. It's always changing. And just because something happens doesn't mean that it always works. It's in an ever-changing dynamic market, you have to change with it. You have your billion-dollar companies, your Goldman Sachs, and companies like that have these black box systems that trade the market. They put millions and millions of dollars in developing these systems. But whenever the markets change, they have to change those systems. You see these big companies like Goldman Sachs that trade these black box systems, and all of a sudden they start losing money, so they have to redevelop them. And they put millions and millions of dollars in each time they do it, but they pull out a ton of money, and and it's worth it to them because it's automated. It's like people that think they can do the same thing with a couple $1,000s. A couple thousand versus a couple million. I guess it's oranges and apples. But it's the same philosophy. So anyway, hopefully you got something out of what I was talking about today. I was using a lot of analogies, so hopefully it actually made some sense. You can always leave comments below the video. Thanks for watching. Have a great rest of your day, and I'll see you back here in the markets. Thank you.